Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 30th, 2026, and we're diving into the latest earnings report from PennyMac Financial Services. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. PennyMac Financial Services has just released their fourth quarter and full year 2025 results, and there's a lot to unpack. Let's get started.
Revenue and profitability overview. Let's start with the top line. PennyMac reported a net income of $106.8 million for the fourth quarter of 2025, with total net revenues of $538 million. John, how does this compare to previous quarters?
Well, the net income is slightly down from the previous quarter, but it's an improvement from the same quarter last year. The book value per share has increased to $82.77, which is a positive sign. Additionally, the company declared a dividend of 30 cents per share, maintaining its commitment to returning value to shareholders.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $3.23 for PennyMac, but the actual diluted EPS came in at $1.97. John, what are your thoughts on this miss?
The EPS miss is significant, coming in $1.26 below the forecast. This discrepancy could be attributed to various factors, including increased expenses and lower than expected revenue in certain segments. It's crucial for investors to understand the underlying reasons for this miss and how the company plans to address them moving forward.
Production and servicing segments performance. Let's delve into the performance of PennyMac's production and servicing segments. The production segment reported a pre-tax income of $127.3 million, while the servicing segment's pre-tax income was $37.3 million. Can you elaborate on these figures?
Sure. The production segment saw a healthy increase in pre-tax income driven by higher loan acquisition volumes, totaling $42.2 billion in unpaid principal balance. On the other hand, the servicing segment experienced a decline in pre-tax income due to increased prepayment activity, which affected the mortgage servicing rights. However, the servicing portfolio grew to $730.6 billion in UP, indicating strong underlying demand.
Strategic initiatives and future outlook. Looking at the full year 2025, PennyMac reported a net income of $501.1 million, with a return on equity of 12%. What strategic initiatives contributed to these results, and what can we expect moving forward?
PennyMac's balanced business model and operational momentum were key drivers of their strong performance. They achieved a 25% increase in loan production and a 10% growth in their servicing portfolio. As we move into 2026, the company is well positioned to leverage its technology and strategic initiatives to drive sustained long-term value for shareholders.
CEO's perspective and closing remarks. Finally, let's hear from PennyMac's leadership. CEO David Spector emphasized the company's strong foundation and focus on continued growth. How does this align with their strategic goals?
David Spector highlighted the importance of their balanced business model and cutting-edge technology as key drivers for future growth. The company remains focused on advancing strategies that will drive long-term value for stockholders, which aligns well with their strategic goals of maintaining operational excellence and expanding their market presence.